Let me share my screen. All righty. Okay, so yesterday we stopped at this point where we were talking about employers, people that were exempt from FUTA. And I think we were actually on this one, wages that were exempt from FUTA. Now we're talking about types of employment that is exempt from FUTA. And they're pretty common sense things, work that's performed by federal, state, local governments, foreign ships, students, foreign governments, insurance agents. There's a lot of actually, if you look up it, there's a lot of different rules on insurance agents, and I encourage you to look those up because they do pop up on the test. Things about insurance agents of their wages and stuff. But it is, and I know I keep harping on this, it is covered in Circular E and Pub 15, some the rules on their wages. Some things that will pop up on the test is like over here on the right hand side, work performed for a spouse or a child, work performed by a child under 21 for his or her parents, work performed by an election worker who's paid less than $1,900 for 2020. I looked all morning this morning. I spent like an hour looking. I could not find that had been changed for 2021. So I do believe it's still $1,900. Work performed by an alien, agricultural worker, and by statutory non-employees. Again, get to know statutory. What is a statutory employee? What non-employee? What's a contract employee? Those will always come up. How to calculate FUTA tax. The rate of 6% for the FUTA tax is for the first $7,000, which includes a permanent rate of 6% and the surtax of 0.2 that's in there. But there's a credit that is given to all the states of 5.4%. And in most states, the employers can take that 5.4% credit if you make your timely payments to your state fund by the due date of the 9/40. And your state must not be in arrears from paying any advances borrowed against the FUTA funds. Now, I told you yesterday that it was Puerto Rico that had a credit reduction, and how the credit reduction works is a state can borrow against the FUTA taxes to pay their unemployment claims, people that have claims for unemployment, but they have to pay back on time. And if they don't, their credit, the 5.4% gets reduced. I was mistaken. It was not Puerto Rico. It's actually the U.S. Virgin Islands is the only one that has a credit reduction that's going on right now. The 5.4% makes it an effective rate of 0.6%. If you don't pay your, if some of the state employment tax, if you didn't pay it on time, you can, that credit of 5.4% might be reduced for you. And we'll go over that in just a little bit when we talk about how to fill out the Form 940. You have to make your deposits on time. If your FUTA liability is less than 500, you can wait until you file your 940. Once you hit $500 though, you do have to make a deposit. And it doesn't matter when that 500 hits. Once your total liability hits 500, it could be first, second, third quarter. It doesn't matter. Whenever your total liability hits 500, you have to make a deposit. So we have an example here of that. Annie's Farmers Market had a taxable payroll of $20,000 for the first quarter of 2021 and a FUTA tax liability of $120,000. She's not, or Arnie's not Annie, sorry. Arnie was not required to make the deposit for FUTA tax owed by April 30th because the amount of liability did not exceed $500. For the second quarter, Arnie's FUTA taxable payroll was $65,000 as more produce was sold, more employees were hired, and the employees worked more hours. The second quarter FUTA tax liability was $390,000, but the tax deposit of $510,000 was necessary because his total tax liability for first and second quarter now equals $510,000. So Arnie had to make that tax deposit. Continuing the example, their third quarter taxable payroll was $30,000, resulting in a liability of $180,000. We're not required to make a liability payment because their liability does not equal $500 yet, because they've already made their total deposit of the liability that they owed. For fourth quarter, the taxable payroll dipped to $10,000 since most of his employees had reached the FUTA tax wage base of $7,000. The liability for the fourth quarter was $60. Since it's received its 5.4% state tax credit. When he completes the 2021 Form 940, the total FUTA tax liability was $750. The balance remaining was only $240 since they'd already made the $510 payment. That $240 will need to be paid when he files his Form 940. Is there any questions on that particular part of the 940? Okay. I had a problem advancing from this slide earlier. So completing the 940, it's pretty straightforward, and these slides, we might want to add this for next time. There's no picture of the 940 in here. So I have got it over here. Let's see. So this is the 940 right here, and we're going to start up here. It looks very similar to the 941. Only you're not going to have quarters over here. Instead, over on this side, you have whether it's amended. So if you do an amended 940, you're going to use the 940 for the year you are amending, but you're going to click this box right here that it's amended. If you're a successor employer, same thing. You're going to click any of these boxes, no payments, final business. That's pretty straightforward. If you're only paying employment in one state, you're going to enter state abbreviations here. If you're paying in more than one state, you're going to click here. Or if you're paying state wages in a state that has a credit reduction, you're going to click here. And on both of those, you're going to have to include a Schedule A. And I do have an example of Schedule A that we'll look at here in a second. And then you just,
sorry, Becky. Hey, I didn't see that example. I don't know if you guys could see it, but I couldn't see the picture or your screen.
Oh, I'm sorry.
No, you're good.
I'm sorry. I
Oh,
probably need to share it.
Okay, I just see that PowerPoint.
How's that? Can you see it now?
Yep, see it.
Okay.
Yes.
All right, we'll go back up to the top. Here's the amended successor, no payments. If you had one state, and here if you are multiple states or credit reduction. I forgot that you only have to you share a specific screen, that you don't share multiple screens. This one is filled out pretty much as it says. Your total payments here, payments that are exempt from FUTA, only you're going to tell them what kind of payments that you're exempting from FUTA, fringe benefits, retirement plan, dependent care, whatever. You're going to check these as to whatever it is. And of course, if it doesn't follow any of these buckets, you're going to click other. Any payments that are over 7,000 are going to go here. You're going to total these lines here, subtract that from line 3. That's going to be your total FUTA wages, taxable wages, and then wages tax before adjustment. So you're going to take this and times it by 0.006. And if you have any adjustments, you're going to put them here. Line 10, this is where you're going to get your, I need to move this. I apologize. I gotta find this, and it's right behind my all my controls for well, all my controls for Zoom. I couldn't see it. So this is the Schedule A, and if you fill all this out, that's going to tell you your any credit reduction that's going to go in line 11 for your 940. That's going to go here. But line 10 is actually if you had anything that's excluded, and that's actually you have to do a worksheet that's on the instructions. And this is the worksheet that's on the instructions. And it's very similar to the worksheets that we talked about yesterday. You just follow along and it tells you where to get everything. The only thing that you're going to have to make sure that you have is you have to have your taxable FUTA wages, your taxable state unemployment, because you want to know whatever state unemployment that you paid on time and any state unemployment that you did not pay on time. Because these are, if some of the state unemployment tax is excluded, or if you didn't pay some state unemployment tax on time, you have to fill out this worksheet. And you might get some additional credit for if there was unemployment tax that was excluded. And that's what this additional credit right here is for. So the tax that you paid on time is on line 2. The tax that you didn't pay on time would be on 5B, but you're going to fill all this out, and the total here on line 7 is going to go on line 10 of your 940. And then you just fill it out as usual. Tax after adjustments. Oops, sorry, went too fast. Tax after adjustment, your total that you deposited throughout the year, and then if you have a balance due, if you have overpayment, remember there's going to be one or the other. It's not going to be both. And then it looks very similar to your 941. After that, you're going to put if you had any deposit or all of your quarterly liabilities, you're going to put down here how much for each quarter, and then this total has to equal line 12. That total has to equal this total right here on part 4. And then the bottom part looks just like the 940. You have your third-party designee, you have your signature or your paid preparer. Are there any questions on your because I went over those schedules in that worksheet pretty fast, but are there any questions on that? Okay, let's go back to this one. Can you guys see the PowerPoint now?
Yes, we can.
Thank you. Okay, so the next we have is the 1099 series. 1099s are for any payments that are wage payments or other compensation paid to employees, non-employees, certain payments to them, or payments to people such as independent contractors, payments for pension plans, or payments for estates or beneficiaries. Maybe you really shouldn't have payments to, it really gets kind of dicey if you have 1099s and W-2s to employees, but sometimes you have payments from pension plans to employees, or maybe like a payment to an employee that was deceased and you have to pay to their estate. It's very similar to a W-2. The annual information is be sent to the non-employee payee. It has any withholding. The copy is sent to the IRS, but it's not sent to the Social Security Administration. But there's a 1096 transmittal form. And it has some reportable payments to someone who's not the payer's employee, payments for services made to an individual partnership, and any payments to the payee of at least 600. Someone has their microphone still on.
Sorry, that was.
Yeah, it's okay. I just didn't want distract anybody. The 1099 miscellaneous, like I said, is for at least $600, maybe for death benefits. I would really, really encourage you guys they do test on how you handle the death of an employee, how you pay the last payment to an employee who has passed away while working for you. So I would encourage you guys to review those, how you make those payments. I believe it should be in a lot of your study material, but I also believe in publication 15, it goes over it a little bit too. Payments for 1099 miscellaneous for medical research, payment to attorneys, healthcare providers, royalty payments, other payments need backup withholding. For backup withholding, always is report, there's a lot of 1099s that payments through 1099s are subject to a backup withholding. It would be things like interest payments, government payments, dividends, patronage payments, rents or profits, commissions, payments to brokers or maybe barter exchanges, fishing boat operators, payment cards or third-party network transactions, royalties. Those are all subject to backup payments. If you don't provide the person with a tax identification number, you can be subject to up to 24% tax for a backup payment. All of those types of things are subject to backup payments. Or backup withholding, not backup payments. A 1099 NEC, non-employment compensation. This got split out last year. All of this used to be reported on the 1099 miscellaneous, but they split it up to two different ones. So you have to know which one has to be reported on a 1099 miscellaneous now, and which one has to be reported on a 1099 NEC. Fees, commissions, prizes, awards for services performed as a non-employee. Other forms of compensation, fish purchases, oil and gas payments, expenses, income from a 419A, non-employee attorney. But I've got a question for you guys. I'm really curious as to why fish purchases in cash have to be reported to the government. I went through that. I'm going, why do we need to report a fish purchase? Why do we need to keep track of that? Do you guys have any idea? Because I scratched my head all over that for quite a while. Why do we need to report fish purchases in cash? It just doesn't make sense to me.
I guess on the coastal states, they would know more about that situation.
Yeah, I guess so. It doesn't
Not here
make
in
sense.
Pittsburgh. We don't have that in Pittsburgh.
Well, we definitely don't have that in the Rocky Mountains either.
Right.
It just doesn't make sense to me. I don't know.
Yes, so you record that side business, I guess.
I guess they want to know who's getting cash for fish. Oh. One of the things is also that there's check boxes for the payer to report payments subject to the Foreign Account Tax Compliance Act. The IRS notified the payer twice within 3 calendar years that the payee provided the incorrect tax ID, the TIN number. if you, that's one of the things that made it subject you to that 24% backup withholding is if you provided an incorrect TIN, and if you've been notified multiple times within a certain amount of time from the IRS that you've provided an incorrect TIN, they'll subject you to that 24% backup withholding on all these payments. So if you have somebody that you provide in 1099 NEC to on a regular basis, you could be getting a letter from the IRS saying, yeah, from now on, it's, or for this next year, you've got to withhold 24%. 1099-R is for retirement payments, retirements, annuities, pensions, profit sharings, IRAs. Both periodic and lump sum distributions must be reported. Anything under $10 is not reported on a 1099-R. And it's sent to the payee on January 31st of the year after the year in which the distributions are made. Other annual returns, the Form 943 is for the agriculture employees. It's very similar to the 941, it's just for agriculture. The 944 is for anything for employment taxes of $1,000 or less. And the 945 is for non-payroll payments such as pensions, annuities, military, gambling winnings, and any payments subject to backup withholding. Any questions on those oddball annual returns? A Schedule D is for discrepancies caused by acquisitions, statutory mergers, and consolidations. Please don't ask me any questions on that because I have never, ever had to do a Schedule D. A Form 1042 is purpose and filing is for non-wage compensations and amounts exempt from tax treaty paid by non-resident aliens and must be reported by the payer annually. Income must be included on the Form 1094, even if no taxes were withheld because of an IRC or tax treaty exemption. The form must be filed by March 15th of the following year. Pretty much on the test, like the text tip says, is you need to know the due date of this and basically what the form is for. This, most people in payroll don't have to deal with this unless you're dealing with international payrolls. Then you deal with this a lot. I don't deal with an international payroll, never have, so I have never dealt with this before. You need to learn these penalties for late filings and deposits because they probably will come up on the test. Pop quiz. Schedule R, Form 941 is used to allocate the aggregate information reported from Form 941 by an agent to each client. Report daily tax liabilities on Form 941 for semi-weekly depositors. Report daily tax deposit reported on 941 by semi-weekly depositors. Allocate discrepancies caused by acquisition, statutory mergers, or consolidations. Number A, it is that allocate the aggregate information reported on a 941 by an agent to each client. It is used to report discrepancies caused. Schedule D is used to report the discrepancies caused by acquisitions, statutory mergers, and consolidations. And Schedule B is to report the payroll liabilities by day, not by deposits. Correcting returns W2Cs. These are so much fun. I look forward to these every year. And I do my utmost to make sure I never have one. Actually, last year we did a payroll, we switched systems and I was terrified. Absolutely, I can tell you I was absolutely terrified of how many W2Cs I would have. Because when you switch payroll systems, you think, there's no way I'm going to get away with this without having a crap load of W2Cs. Fortunately, I only had 178 employees, so it wasn't like I had a ton of employees where things could have gone wrong. But we were downgrading from a very good system to QuickBooks of all things. And QuickBooks, when you put in employees, when you're first adding employees to the system for new, they'll only allow you to put in two states. They seem to think that nobody's going to work in more than 2 states. And I had employees that were working in 3 or more states because it's construction. They'll work for 2 or 3 months in one state and move to another state for 3 months and move to a third state for the final part of the year or whatever. So I had employees that were working in, I think, 3 states total. We had California, Nevada, and Colorado. And I couldn't put them all in. I had to go in and go back in and manipulate it and move things around. And of course, it didn't print up right on the W-2s. And I had to take those, I think it was like 14 employees. I had to put them all on a spreadsheet and I had to put in everything on each tab of their spreadsheet. I had to put all of their wages, their total wages, and then break it out per state and then know exactly what went on what box on their W-2. And it took me days just for those 14 employees to split it all out and figure out what went where, because of course they all had benefits and 401k and all this stuff. But when I got everything fixed, I ended up only out of 178. I had one employee I messed up on. So I only had one W2C that I had to do. And I caught it after I sent him out, and he called me up like the day after I sent him out and he was asking about it and I was looking at it and I caught it. So I told him on the phone, I just sent you one and it's wrong. So don't use that one. I'm going to send you another one. So I caught it right away, but I was pretty dang proud of myself for that one because it was pretty difficult. But when errors have been made in a previously filed W-2, employers must correct them by filing a W-2C, corrected wages and tax statement, and send them to the SSA accompanied by Form W3C, transmittal of corrected wage and tax statement. Fortunately for me, mine was a state correction, so I didn't have to send the W2C to the SSA because it didn't affect his Social Security. It was only a state correction. The Form W2C consists of 6 parts, and guess what? You cannot do it out on a computer. You have to type it out. I still haven't figured out why they do that yet, but you have to type it out. And it says right on there, you cannot print it out on computer. The Form W2C does not have to be filed to correct administrative errors of up to $100. And does not need to be filed with the SSA to correct the employee's address if data corrected is if employee address or if state corrected is state or local dated. I'm sorry, I can't talk right now. I can't read. So basically, if it's federal income tax, Social Security tax, Medicare, it's discovered before the Form 941 is filed. If federal income tax discovered after 941 is filed, additional Medicare tax discovered after 941 is filed, Social Security or Medicare tax is underpaid or discovered after 941 filed, recovering from employees. When over withheld federal income tax or additional Medicare tax must be repaid to the employee, the repayment must occur before the end of the calendar year during which the error is made. The employer can make adjustments on the 941X to avoid the accumulation of interest on underpayment. This is where doing your reconciliation every single time you do a payroll run will save you. If you're doing your reconciliation if you're doing a weekly payroll or semi-weekly payroll. If you're doing a reconciliation each time you run payroll, you're going to avoid errors like this. You're going to figure out that you've over or under withheld because you're reconciling at the end of each one. And you're going to figure it out real quick that your Social Security is not adding up or that your Medicare is not adding up. And then you can go through and figure out what's happened. The purpose of the W-2C is when errors have been made on previously filed W-2, the employers must correct them by filing a Form W-2C, and the accompanied W-3C must be sent to the SSA along with the Forms W-2C. The Form W-3C totals the information from all the Form W-2Cs that are being submitted. The 941X, if the employer has properly repaid over withheld amounts to the employees, they can claim the credit against taxes due by making the adjustments on 941X. For federal income tax repayments, the adjustment can be made on any Form 941X for the same calendar year the error occurred and was discovered. For Social Security or Medicare tax repayments, the adjustment must be made no later than the due date of the Form 941 filed for the quarter in which the error was discovered, but no later than 3 years from the due date of the return filed, which contained the error. Forms 941, 943, 944, and 945. The period of limitation due date is April 15th of the year after the close of the tax year. Does that make sense? Does anybody have any questions on those? It's kind of circular logic sometimes. This kind of tells you the tells you the answer. So the 943 is the employer's annual tax return for agriculture employees. The 944 is for under $1,000 and the 941 is employer's tax return. The 945 is non-payroll federal taxes. Correcting returns, Form 843 is a claim for refund and request for abatement. To claim for abatement of assessed interest and penalties, use the Form 843 to request abatement of overassessment or underpaid portion of an overassessment if more than the corrected amount of interest or penalties has been assessed. You have to file a separate one for each type of tax. So you cannot use a Form 843 to request abatement or income tax withholding overpayments. Employers can use the tax form that corresponds to the tax return previously filed to make the adjustment or claim a refund or abatement of Social Security, Medicare tax, or income tax withholding payments. So if you're using a 941, you're going to correct using a 941X. If you're using a 943, you're going to correct using a 943X, so on and so forth. Oops. This is one I was telling you about that you need to learn pretty good. Wages paid to deceased employees or their legal representative after they die, but in the year of death, they are not subject to federal income tax withholding, but they are subject to Social Security and Medicare and FUTA taxes. Wages paid to a deceased employee's estate or legal representative in the year of the employee's death, they're reported on in box 3 of the 1099 miscellaneous in the name of the beneficiary or in the name of the estate. Sometimes you have to pay it to the estate sometimes you pay it to the beneficiary. But you don't take out federal income tax, you only take out Social Security and Medicare.
Can I ask a question here?
Sure.
I mean, I know the CPP is just on the federal law, but at the state level, do you take out state income taxes? What about state unemployment? Do you know?
I don't believe you do. They usually tend to follow federal law when it comes to that. If you don't take out federal income tax, you don't take out state income tax. But when it comes to unemployment, no, I do not believe. I would have to look it up and I can let you know. But I do not believe that you do, because obviously they're not going to be applying for unemployment on that last check. But I will look that up and send it out to you. It depends on each state too.
Okay, thanks.
Mhm. So Form 470, these are the tips reported on to the employer. Now this says receiving less than 30. That's actually less than $20 in tips in a month. I did not catch that. So we'll have to correct that. In employees receiving less than $20 in tips in a month are not required to report tips to their employers. Form 8027, employers annual information return on tip income and allocated tips. This is for like big establishments. Report to the IRS on receipts from food and beverage establishments for tips to the employees. And the SS4 is for the employer identification number, the EIN for sole proprietors, corporations, partnerships. I think we all know what an EIN is. Voiding a check issued in error after all returns were filed will require all of the following procedures except a refund by other taxing agencies, a refund to the employee, a refund by the IRS, or submission of the Form W4P3.
Go ahead and all the info on that trigger to the card.
Going to conclude a refund to the employee. When voiding a check that is not constructively received in the subsequent year requires correcting wages and tax reported using the W2C, 941X, and the appropriate state forms. Since the employee never received the monies, no refund is due. This is really an important test tip. They will construct a question in such a way that a single word will change the scenario. So you really need to, my test tip to you guys is to read the question, read all the answers, get kind of an idea of what you think that the answer is, but go back and reread the question, because it may be the question of the word is an and, or the word or. With an and or an or, it's going to change the whole scenario of the question. And this question is a very good example. The word except will require all of the following except this. So it's really, really, really important when you guys are testing to read the question very carefully, read all the answers, and then go back and then reread the question and see if the answer that you have in mind fits the question again when you reread it. Because it may change completely because you've reread the question and like, oh, wait a minute, that's a different scenario than I was thinking. So be very careful when you read the question to make sure that you're seeing all the words the way they're supposed to be seen. Because a lot of times we read something really, really quick, especially when we have time constraints like we do on a test. The following information is going to be used to complete the Form 941 and the Schedule B for third and quarter of 2021 for East Bridge Clothiers, a semi-weekly depositor that pays wages bi-weekly on Fridays. So every other Friday. So we can see that their name, their address, the EIN, and we're going to see, particularly, I want you to look at the dates, July 2nd, 16th, 30th, August 13th, 27th, September 10th, 24th, their particular tax liabilities, the number of employees, the total wages, Social Security wages, Medicare wages, additional Medicare wages, federal income tax, Social Security income tax, Medicare tax, and additional Medicare tax withheld. So we're going to go ahead and fill these things out. So the first thing we're going to have is their employer identification number, which is going to go up on the EIN up there. Then we have your name, their address. One thing that they did skip on here is over on the quarter reported, over on the upper right-hand side, you're going to fill out what quarter is reported. So this is going to check mark number 3. You have to make sure that you fill out that too. So line 1, line 2, line 3, and we're going to drop down to line 5A, 5C, 5D, 5E, and 6. This is a fairly straightforward one. We don't have any qualified sick or family leave. We don't have any taxable tips. We don't have a notice of demand. Is there any questions on this one? And like I said, the only thing missing on this is that upper right-hand corner. There should be a check mark on for the quarter 3. So now we have line set. We're going to fill out, we're going to fill out the name and EIN on the top of this. The non-refundable of COBRA assistant premium assistance credit. Non-refundable. So we have these qualified sick and family leave wages taken for first quarter. And you can see in this upper right-hand corner, total taxes on line 10 was $438,150. And that's the total of the non-refundable portion. And then of course we're signed here. The proper person has signed it. Now we're going to fill out our Schedule B. I told you to take note of the dates of the liabilities. And that's the date that they're going to have them on here. The date that you actually make the wage payments, not the date that you deposit it. They put down here date of tax liability / deposit. You don't always have to deposit the day that you make the day of your tax liability. You may deposit it a couple days later. In this case, they deposited it that day. So we had month 1, which is July, month 2, which is August, and month 3, which was September. And then we added it all up at the end. This total liability has to match line 12 on your Form 941. So we almost ended on time. So do we have any questions on all of that? There was a lot to go through this week. The 941 is packed through. I have done multiple classes on 941. If you ever have a chance to do a class with Jim Medlock on a 941 ticket, or just a class with Jim Medlock, period, ticket. He's with the Northern Colorado chapter of the APA, and he often gives, he was part of the one of the teachers that went around with the APA for years. He's partially retired now, but he's an excellent speaker. So if you ever have a chance to take a class with him through the Northern Colorado chapter, I would encourage you to. But I've taken multiple classes with him, just the 941 alone. There's a lot to it.
Becky, when you were talking about the Form 843, what is the real difference in layman's terms between filing the 843 and like a 941X?
So the 843, I'm going to go back to that. Let's see. So in the case of the 843, the 941X, you're saying, I want to correct this particular thing right here. The 843, you've had something assessed against you. You've had interest and penalties assessed against you, and you're asking for an abatement of those interest and penalties. See, so a lot of times what you'll do is you'll get a letter from the IRS saying, we've had these interest and penalties, and you know that that's wrong, but you don't want more interest and penalties assessed against you. And then you know it's going to take you a while to get together everything to fight against it. So a lot of times, especially if it's really large, a lot of times companies will just pay it right off, and then they'll gather everything together, and then they'll use this Form 843 to send and say, okay, we're contesting this. Here's our reasons why we're contesting this. And here's the Form 843 to ask for the refund for that as interest and penalties that we've paid. And here's all our proof that we didn't need to pay that, and for you to abate those interest and penalties and to get our refund back. Does that make sense?
Yes, thank you.
Okay, good. I never paid it. If I knew they were wrong, I was like, oh, hell no, you're wrong. I'll send off my letter. We had that a couple of times. We had one where we fought with them for a year because I sent 3 times I sent in my Schedule B, and they kept saying, you're wrong, you're wrong, you're wrong, you never sent it in. And I had proof I sent it in. And they finally came back and said, oh yeah, you're right, you did send it in, we're going to take all this off. And I'm like, ha, let's polish my nails on my shirt because I knew I was right. Okay, any other questions? Okay, so we're ending just a few minutes early. Yay. Got a few minutes to run into the bathroom before you have to go back to work. Go outside and see the sunshine.
All right, thank you, Becky. I really learned a lot this week.
Oh, good. Like I said, if you have a chance to learn from Jim, please do. He doesn't do it a lot anymore, but he is an excellent teacher.
Thank
I
you.
wonder if we could get him at our seminar this fall.
You have to actually go through the APA to get
Okay.
him. You have to request him through the APA, but he probably would. He would cost us, but he would do it, but he would cost us.
All right. Have a great weekend, everyone. Good luck at your job interview, Becky.
Thanks.
Thanks, guys.
Bye.